Well, hello, everybody, and welcome to this very special edition of the Todd Vino Show. Today, we will celebrate Financial Literacy Month with a special live edition of Mortgage 101. And we can't do that show without our first guest, who will be joining me for the first hour here. That, of course, is our good friend, mortgage guru, and all-around nice guy. I don't know about the third part, but anyway, that's Clinton Wilkins, of course.
The third part might be a bit of a lie. We're not sure. But that's okay. And you know what? We've had such a magical year this year, Dan. You know, really a really great season. And there's no better way to wrap up Mortgage 101 for 2025 than with Financial Literacy Month. We had our show that was on the first weekend of the month, kind of kicking it off. And we've been talking about income, assets, and credit all month long. And it's really great to have a live show and be back, you know, during the week, because I'm sure there's some listeners who don't hear us on the weekend. So it's great to be on here with you on a Thursday morning.
Now, before we start, a couple of housekeeping items, Clinton. One, we mentioned this is a very special edition of the program, and that's because A, you're here and we're doing it live, but B, my studio's full of cameras today. And
we are very, very live.
Yeah, we are very, very live. We're streaming. We're doing a live stream, which I don't think, well, I know I've not done before. Mm-hmm. So you can catch that on Clinton's Facebook page if you want to follow along with us and see what we really look like.
Yeah, it's on Clinton Wilkins' mortgage team. It's on our business Facebook. You can watch us live. You can see the full hour. And we have an hour full of guests, and it's going to be really, really great. We're going to talk about home ownership. We're going to talk about mortgage lending and real estate and what's going on here in Halifax.
Very quickly, before we get into all that stuff, Clinton, I wanted to send a shout out and send all of our positive energy down to Scotia Bank Center and to Team Black. Christina and her Nova Scotia team have qualified for the playoffs at the trials. There's just three teams left. It's Team Black along with Team Einerson and Team Holman. Reading some of the pundits this morning, I shouldn't have done that, but I did. Saying they're not given much of a chance because of Einerson's and Holman's success against them in the past. To that, I say, bah, come on.
Bah humbug.
Bah humbug. They have the hometown Blue Noser spirit behind them, which is like having an extra person on the sheet. Mm-hmm. That energy counts, folks. This tournament is had a history of ups and downs. If you remember 20 years ago when it was here, that's where Brad Gushu rose to fame, nobody knew he was until that point. So go Christina, Jill, Jen, Carly, Marley, and Coach Stewart. All of the Todd Vino Show fandom are behind you.
And our listeners, of course.
Yeah, absolutely. So, Clinton, this is Financial Literacy Month, and we have celebrated this in the past. Mm-hmm. And I know you find that this is an important month to not only get out there and tell people about the real estate market and why they should be in it and the way to get into it, but also to give them a little bit of education of how they can get themselves into better financial shape as we head into 2026.
Well, it's a 15-year anniversary of Financial Literacy Month, and it's put on by the Financial Consumer Agency of Canada. You know, overall financial literacy of Canadians, Dan, the education level is very, very low, and that's why I think our show that we do here, Mortgage 101, is so important. I think we're breaking down some of the barriers. You know, we've talked that, you know, we've encouraged people to have conversations about their income, their assets, and their credit at the dinner table, and I hope that happens again tonight. You know, November is a month where we're really leading up to the holidays, and the holidays can be a very daunting time for folks, especially financially. You know, there's a lot of strains, and there's a lot of strains right now when we're looking at what's going on in the economy. You know, really, truly, I think we're in a recession, and inflation is still high. We're still battling that. And, you know, the amount of cost of consumer goods has increased faster than people's income. So I think people are definitely squeezed this year. How can they put themselves in the best possible financial position between now and the end of the year? And how can they start the year right in 2026?
Education's an important component, right? Because, you know, when you're sitting around and you're having those difficult conversations around the supper table and you're coming together with where you are in a financial state, there's a significant portion of the population out there, I think, that really don't even know where to start to look at what and how healthy they are or unhealthy they are financially.
It can be so daunting. You know, really, and we break it down in very small little bite-sized pieces, I think, Dan. You know, when we're talking about credit, let's do a deep dive about credit. You know, we talk about Equifax, we talk about TransUnion, we talk about how can people improve their credit and how can they maintain their credit. And that's just one small piece. You know, sometimes people think that's the only thing. Well, there's a lot of other things that are involved in financial literacy income and assets. And it can be daunting when you're looking at that big picture, but I think you need to break it down in little bite-sized pieces and, look and research and learn and improve, small steps at a time.
When we did our show earlier this month, Clinton, we shared a lot of really valuable information. And if you haven't heard that one, you can go back onto our side to your side, and you can pick that off and you can listen to that at your leisure. But what I got out of it was that for some, and I'm going to put myself in this category, particularly when it comes to credit and debt, of course, it was that bill at the end of the month was really all I paid attention to, right? But in order to get your financial house in order and to start 2026 on the right foot, you have to be active in your own finances, right? You can't just buy it and forget it.
No, and as much as you seek the advice of specifically for us, if you seek the advice of an unbiased mortgage professional, that's one piece of the pie. You have to be an active player in your own situation, and I think sometimes people forget that. One of the big things that I advocate for is make it automatic. Bill payments, make it automatic. Your minimum credit card or minimum payment on your credit card, make it automatic. When your savings, make it automatic and have that come out when your payroll comes out. Everyone has great intentions of paying things on time, saving and investing. But really, the people that are doing it are the ones that are getting it set up that it happens automatically because, it's just human nature. Things come up, people forget, and everyone's busy these days. I see so many folks in my office that have had previous credit challenges. And sometimes it's as silly as they're missing a $10 minimum payment on a credit card. Really, today, there's no need of it. Majority of credit card companies, for example, offer an automatic payment. So get it set up, set it and forget it. And, credit products like a credit card, I think you need to also learn and get a handle on it that it's meant for short term. Really, we don't want consumers carrying a balance on a credit card. Lots of us do. But when we're trying to get our financial house in order, it's about tackling some of this highest interest debt first.
And we also had a discussion earlier this month, and I thought that was valuable as well, that when it comes to income sources that you have and just trying to figure out what your monthly income is, it's not just the paycheck that is your income source. There's a number of things that people may overlook when it comes to that calculation.
Oh my goodness, there's so many other things that we take into consideration, specifically when we're looking at qualifying someone for a mortgage. Things like child tax benefit, or maybe someone's gone through a separation and they have child support or spousal support. We take those things into consideration. Pensions, CPP, OAS, other pensions that people may have. And a lot of consumers, more and more, Dan, every single day are becoming self-employed. And that can be very, very daunting because a lot of self-employed people, they've walked into their bank branch and they've been declined because maybe they're newly self-employed, or maybe, their income isn't high enough to qualify for what they want, or maybe they don't have their income tax filed on time, God forsake. But we deal with a lot of self-employed borrowers, and there's almost more programs available for self-employed and different ways to make it happen than there is for someone that just has a pay stub. So we're really excited about dealing with self-employed borrowers, and more Canadians are becoming self-employed all the time. Like, for example, this week we saw a customer that worked for a plumbing company the last 10 years and recently, just this year, became self-employed. Normally, back in the old days, they'd have to be self-employed for 2 years, get 2 full years of tax returns before we'd even look at that customer for a prime lending type product. But we were able to get that approved with a bank lender, prime mortgage. We were able to justify their income and show their previous history in terms of qualifying them today. So certainly, there is definitely a bigger appetite to help self-employed people. And I think there's a lot of different programs out there that, we can certainly, take advantage of to help.
We've got some really, really special guests that are going to join us on the program today, are going to give us a perspective of things not only here in HRM, but across the country. But Clinton, you're in it. You're doing it every day. How's the market? And we've read stories. I've seen stories about the market slowing down across the rest of the country. What's happening in HRM, and what can we expect in, say, the first quarter of 26?
I would say we're not in a bubble, Dan. I think our market in Atlantic Canada is very similar to the same type of story that they're seeing in the prairies. It is very stable. The one thing I will say that's going on in Halifax is we have a lot more listings than we did here a year ago, and things are sitting on the market for a longer period of time. I don't think it's a bad thing. I think the market here is more balanced, but we still have seen price growth. Even though we're seeing property sit for a longer period of time, we're seeing that price still increase. So it's still a good investment. And I think that there's more opportunities for buyers to get into the marketplace. And later in the show, we'll talk, about first-time home buyers and if 2026 is going to be the right time for some of these people to enter that real estate market. For me, the best time to buy a home is yesterday. Really, when we're looking at the consumers that purchased homes even 5 years ago, Dan, many of them, their homes have doubled in value. So, I think that's going to continue to be the trend. I don't know if their prices are necessarily going to increase that quickly, but I'm very comfortable to say that we're going to see these prices increase between 3% and 5%. And I think that's normal, and I think that's definitely going to be more balanced.
Clinton, on this program for many weeks now, we've been talking about property tax, and we've been talking about
hot topic.
Oh my goodness, and City Council looking at a 10.5% increase in property tax. We know there's some significant increases coming in electricity rates. We know there's a 36% increase in water rates. Is that keeping people out, do you think? Are they waiting to see what happens with that, or is with all the listings that you're telling us about, are people saying nope, good time to get out, or good time to buy?
I really don't think it's going to have a huge impact, to be honest. I think our property taxes were probably on the lower side for a long time. Everything has gone up in cost, Dan. The one thing I will say, based on the property taxes going up 10%, if that's the actual tax rate, obviously HRM is taking advantage of the assessments going up as well. But there's a lot of people that still have a cap on. So I think it's going to hopefully rebalance what's going on in the tax scheme. By and large, our taxes are around 1% of our assessment value. There's certainly a lot of municipalities out there in Nova Scotia that have taxes that are, 150% higher than what we're paying in Halifax. Yes, our taxes are high, but we are very services rich. I think, and I hope that HRM will balance out the increase. They've certainly had some of the disadvantage of the assessments going up. But I think the real thing that HRM needs to focus on, Dan, is getting some construction starts going. We need to increase the tax base, maybe more so than focusing on increasing the taxes for the individual homeowners that already own a home. We have a 20-year hangover of not doing construction here in Halifax. Yes, we have a lot of cranes in the sky, but that should have been years ago, us getting this amount of construction going. People that are renting, they are very squeezed. We have some of the highest rents compared to income in the country. We need these units to come online to help soften that rental market. And as me saying as a mortgage broker and someone who really wants to promote people buying homes, we need rentals just as much so we can free up some of this lower cost real estate. Think about the little old lady and the little old man that are not going into an apartment because they can't afford it or there weren't any apartments for them to have. It has prevented first-time home buyers from getting into the market. So it's really hurting all verticals of real estate, but we need all types of construction. We need single families, we need rows, we need multifamilies, we need all sizes and types of real estate construction going on in Halifax, and that's what I want to see HRM promoting so we get a higher tax base.
This is a very special edition of Mortgage 101. We're live here today for the next 45 minutes or so. As we mentioned, we've got just a real list of really good guests that are going to come in and impart their knowledge upon us. We're going to continue to do that. Also, Clinton tells me that he brought something along with him that he's going to give away at the end of the show.
We are. I'm going to give it a little teaser here before we throw it a commercial. We are going to be giving away two VIP tickets to Crave. That's happening here in January. It is an event that's put on by the Progress Club here in Halifax. The actual event is January 24th, and these VIP tickets are going on sale today at noon, but we're going to have a lucky listener. We're going to give away two tickets. So we'll open up the phone lines at the end of the show and give away two tickets.
Beat the box office, right?
Beat the box office. You'll be the first person to get two tickets in your hot little hand for Crave in January. And we are a sponsor of the event. We're very proud to be able to sponsor it. The Progress Club does amazing work here around Halifax. And we have members of our team that are partners and on Progress Club. So we'd love to support them.
We're going to take our first break here on the live edition of Mortgage 101. When we come back, very pleased and had an opportunity to speak with him, and I know he's looking forward to this. The Chief Operating Officer for Sagan is Jim Spitali, and he will be joining us here in the studio with Clinton and I. You're listening to The Tavino Show, a special Mortgage 101 edition. We're back after the break.